let's turn to the future a little bit, because I'd love to get your thoughts on, will the market actually bottom out in 2023, given all the media hype?
Okay, let me just put my crystal ball out. Let's gaze into that. Like I said just a second ago, I think as well, if we go by history, now history doesn't repeat itself, but it does have a tendency to cause or create patterns that eventuate in the future. Average down cycle in the Australian property market nationally, for what it's worth, is 3 quarters. In 2017, we had the longest one for 6 quarters. Upswings go much steeper, much harder, much longer than downturns, so that's good news. But if we take history, the current property market is likely to bottom out around September, October time, if history repeats itself. Now, of course, we know that interest rates have risen at a record gradient. It's never risen this much, this fast. So is that likely to happen? Is the 2017, length of downturn likely to happen again? Probably not. Like, if I was a betting man, which I'm not, I would say that this downturn would last a little bit longer, let's say into the rest of the year, maybe till November, December. But I think everyone needs to consider what medians really are. Everyone needs to consider what property data at the aggregate national level really is. And what it really is basically just Sydney and Melbourne, because the weighted index, there's so many more properties that sell for so much more in Sydney and Melbourne. And so therefore, the national property market is a reflection of what's going on in those big 2 capital cities. The reality is that the market will likely bottom out earlier in places like Adelaide. In fact, North Adelaide is not even dropping yet. Okay, so every suburb, every LGA, every area has its own cycle. Perth is rising, so the question of when will Perth bottom, I mean, it's not dropping, so you can't really predict when it will bottom if something's not dropping. So that's kind of my thoughts at a national level, at a local level. I don't know if that's helpful, but I think it's useful and helpful for people to start to think this way, even if they can't get to a perfect answer.
I totally agree. And I think the other thing to recognise, as you sort of touched on in relation to interest rates, is that, yes, they've risen pretty rapidly, but we're only getting back to what the long-term average is. We're not even quite there yet. So we've been in this artificial zone. And while it's been a while, people tend to forget what the true conditions are. And exactly the same applies to property. What we're seeing in the softening of property is actually very normal for an old crusty guy like myself who's been in the industry for a long time. What I expected exactly what we're seeing now. There's no surprise or shock about it. It's just a normal part of the overall movement of property conditions that vary around the country. So extremely well said. The big question, obviously, that everyone's going to be looking at here, though, PK, is where are the best opportunities to invest right now?
Yeah, sure. I might tackle this from a commercial versus resi, and then let's go into the resi. I don't like to use this word, but hotspots, for want of a better term. So I think commercial property is really becoming very popular because there's a lot of content online for people to become educated about it and what have you. My contention or my sort of argument with commercial property is that the markets typically price it on a yield spread versus the average variable lending rate or interest rates. Yep. Now, there's a lot of yield compression that has occurred. In other words, yields have come down, cap rates have come down, prices have gone up in commercial property, and they haven't really reverted themselves just yet. Now, unlike residential, where yield can be terrible, like 2%, let's say in Sydney, but capital growth fantastic, doesn't quite work like that in commercial. The capital growth or the yield compression or vice versa is almost in direct correlation with interest rates. So with interest rates rising, you'd expect yields to rise. You can get a CBA term deposit at 4%, risk-free asset. Now, the average yield for commercial property, blue chip commercial property, I would argue in Sydney, Melbourne is actually under 4%. So that doesn't make any sense because there needs to be a yield premium. Even with Perth commercial, Brisbane commercial, Adelaide commercial, that yield premium means that yields or cap rates need to rise and therefore valuations need to sink. So for what it's worth, always exceptions to any rule and markets where they're markets. But for my money, residential is a better bet than commercial right now. And we've talked about the markets and cycles and locations and residential, but where I would be investing right now, the best opportunities are where the affordability lies. And the affordability lies most still in Queensland, in South Australia, and in WA. Now, WA, Queensland, you have to be very cautious that you're not overexerting yourself into a mining-led economy. But there are areas within Perth, let's say, that aren't exclusively reliant on commodity prices. Same with like Townsville, for example. 10 years ago, that was a mining town, no doubt about it. It's no longer a mining town. A place like even Rockhampton or Bundaberg are no longer one, industry town. So they present opportunities where incomes are very high, where property prices are very affordable, and the data, the balance between demand and supply is very strong. Same with northern parts of Adelaide, even a place like Gawler. Not that I'm saying to go out and buy there, but prices are increasing there. So these are amongst the best opportunities in Australia right now, not trying to time the bottom of a Sydney market and spending $30,000 a year to try hold that property.
Yeah, extremely well said. And I think the important distinction for those listening and watching today in relation to the commercial exercise is that it's become a bit of a flavour of the month. There's a lot more interest and a lot more information there, but people do need to realise that the hurdle rates in terms of the equity contribution to commercial are generally significantly higher than what they are in resi. So you just need to bear that in mind. And on the residential front, the key, given that we've just been through this situation where just about every property in every area as a result of the COVID stimulus and the petrol that's been thrown on the fire is actually increasing in value, then we need to be looking at forward indicators rather than lagging indicators as far as ongoing growth is concerned, if you're looking for capital growth. So that the sort of return and focus on quality is now more important than it's ever been. So some really good thoughts there, PK. Look, as always, I want to thank you for these very timely observations and your insights again. And thanks again for your generous time on the show today.
Appreciate it, Bushy. Very grateful.
Thanks, PK. Well, yet again, let's remind ourselves that the best time to purchase property is actually every time you can afford to, because it's never about when, but it's always about what, where, and how. And in our current environment of fear and uncertainty, it's good to remind ourselves of the sage words of the world's greatest living investor, Warren Buffett, who wisely says, "Be fearful when others are being greedy, and be greedy when others are being fearful." Because in the wonderful world of Australian property, with nearly 11 million properties spread across over 15,000 different suburbs and locations, where there's a will, there's always a way. As long as we continue to live in properties, there's always property opportunities. So if PK's approach has resonated with you and you'd like to find out more, check out consultingbypk.com.au, where you can explore his Property Investment Accelerator course, or feel free to watch his very informative Australian Property Mastery with PK Gupta videos on YouTube. Or you can join his Facebook community of the same name.